Greetings. My name is Ted Hicks. I'm the founder, CEO, and Chief Investment Officer for Hicks Associates Wealth Management. Today is Friday, February 17th, 2023. We're going to talk about two quick things today. One is an update on inflation, and two, we're going to talk about this important 4,100 level on the S&P 500. But before we look at the stock market, I want to talk about inflation. So first, let's review what I said in the monthly market monologue that we posted at the beginning of February. We know that one of the biggest challenges that we have all been facing in this economic climate is the record high inflation. Well, on the screen right now is a copy of the news release from the Bureau of Labor Statistics. You can easily find it online yourself if you'd like to read the full report. But what we want to highlight is the makeup of the number that gets printed. I think we're at 6.5 or 6.7, something like that right now. Well, that's the annual year-over-year change. Well, that is made up of the month-to-month statistics. And what I want to highlight for you is the fact that those month-to-month statistics are going down. And so you can see that since June, we see a declining trend in these numbers. And so if that trend continues, the annual inflation number should indeed continue to come down. So let's pause it right here. And in particular, I want to zero in on that December number of negative 0.1%. Now let's look at the January 2023 update. So the Bureau of Labor Statistics released this report on February 14th. In particular, now I want to highlight first, look at the December number. It's been revised to a positive 0.1%, and then look at the January number of 0.5%. So the record high inflation that we've all been experiencing is not going away just yet. So even though it has come down a little bit, it is not going away, which is going to lead us into the conversation about the stock market. So on the screen right now is the S&P 500 dating back to 2002, and we're going to zero in and talk about what's been transpiring here since February 1st. If you've been watching our videos for any length of time, you know that we spent a fair amount of time talking about the 200-day moving average. That's represented on the screen by the black line. Again, the 200-day moving average is approximately 9 months worth of history. And so the good news is the market has recrossed this 200-day moving average. Looks like it has been able to stay above that. But what we've been witnessing right now, you can see I've highlighted this 4,100 level on the S&P 500. And one of the things that we have been talking to clients, as well as some of the other research that we write for other advisors, is the importance of this level. So today, it's currently about 10 o'clock in the morning. The S&P is down for the day, just about 0.7% from yesterday's close. And so that's going to keep us, right in this level. So the point here is the good news is that we've had a little bit of a battle. The bulls and the bears have been battling it out around this 4,100 level. If the market can hold here, I would contend that is very good news for the stock market overall, because there is a certain amount of evidence that suggests that this level on the S&P 500 is more important than this 200-day moving average. If the market cannot hold this level, in particular, if we cross below this low of February 10th, I would be a lot more concerned that we are going to go back and retest that 200-day moving average. And I'm not convinced that's going to serve very well as strong support. This is important because one of the things we've been talking a lot about is the fact that the stock market historically does not bottom before a recession starts. And so right now there's a very high percentage of economic pundits that believe that we're going to see a recession in 2023. Well, that implies that the stock market will go back down. So if the stock market can hold this level and advance beyond it, especially if we can cross above this February 2nd high and maybe close above 4,200 on the S&P 500, that would signal to me that we are going to be advancing, and there may not actually be a recession in 2023, despite the high number of pundits that believe that we might see one. So that's it for today. As we wrap up, I will again mention the fact that Hicks Associates Wealth Management is again going to be sponsoring a cycling team for this year's V Foundation Victory Ride over Cancer. Cancer affects so many of our clients, both directly and indirectly, and I'm sure it's touched a lot of our viewers. If you would be willing, if you are able, and you want to support our efforts, we're trying to raise, I think I set the goal of $12,000 for the entire team. I myself am trying to raise $3,000. If you would be interested in supporting us, you can make a secure donation. I'll put the link below. Again, until the next video, thanks for watching. Hope you find these videos helpful. If you do, please feel free to share them with your friends, colleagues, neighbors, etc. We definitely have capacity to serve additional clients and can serve clients pretty much anywhere now that we are all used to working virtually. So anyway, thanks for watching, and we'll see you next time.